Okay, first of all, I want to say a massive thank you to each and every one of you for helping the channel reach the 4,000 subscriber mark. We reached it over the weekend, and I'm extremely grateful to all of you guys that subscribe to the channel and have been supporting the channel along the way. If you are new to the channel, please hit that subscribe button. Our next goal is to get to 5,000 subscribers. So any video that you guys have found useful, that you found has helped you, please share it with a family member, a co-worker, a friend, a foe, an op, a Tinder date, ex, whoever. Share it with somebody, and obviously we can help everyone grow on this investing journey together. But today I want to talk a little bit about the whole coronavirus situation and the market dropping, and I think it's the right time to get some advice from the great. So obviously today the market has rebounded somewhat a little bit, and I've actually had an influx of questions within my DM about, will the market keep on falling? The market has made a little bit of a turn. Is it going to start rising? Should I buy this stock now? Should I wait? I've sold the stock. Did I sell too prematurely? Should I get back in, etc., etc.? Now, I'm personally an advocate for long-term investing. Obviously, I do trade sometimes, but this channel is generally focused about long-term investing. It's about buying businesses that you believe in, which will give you a return on investment and give you wealth in the future. Now, I think right now it's time to hear from one of the greats. I've seen this clip from Warren Buffett, and it's a very, very short clip, but ultimately he talks about his reaction to the whole coronavirus situation and how he basically plays it. So I'm going to play this clip, and then I'm going to give you my thoughts and feelings at the end, and some other insights that I think is going to be valuable for you. So take it away, Warren.
Obviously, one of the things that you touch on in the on the letter is when people should be buying stocks. We're going to dig into a lot of it, but when you're looking at the futures down about 818 points this morning, I think probably the first thing viewers want to hear from you are your thoughts on what's happening with the coronavirus, if this is a reason to panic, and if you are worried about this.
Well, I don't know I have any special thoughts beyond the news on the coronavirus. The very first day I bought stocks was March 12th, 1941, 42. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably you can buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own, American Express, we've owned it for 20 years, Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then it's your good luck, basically.
Big wazzy, say no more. Listen, in that very short clip, I think Warren Buffett actually gave us a lot of key gems, and there's three key takeaways that I've basically taken from it. The first one is terminology. I do think it's quite important that we actually change the narrative of how we talk about stocks and actually start referring to them as businesses, because it actually gives us a bit more of a human feel to it. And we understand that we are buying businesses, we are buying machines and entities and corporate entities that, have products and services that go to people that we believe make people's life better, that's going to help generate them revenue, which effectively will generate us revenue as shareholders. And if we start, thinking about businesses rather than just a stock or a ticker symbol, then actually it might have a different perspective or a different plan of action, the way we might take it. I always liken it to the fact that, anyone that works in a corporate environment, you'll all know that pretty much every single company has a department called HR, which stands for human resources. And sometimes I'm asked questions, what resources do we have, or what's our resource allocation? And I always sometimes find that a little bit of an annoying phrase, because you know what, when you're referring to resources, you're referring to people effectively. And why can't we just say people rather than resources? And ultimately, when you actually change the word and the terminology, for me, it takes on a whole different meaning. So, it might not be important to you, but to me, it's really, really important that actually I start looking at it as businesses, reminding myself that we're buying businesses. And for some of you guys, that might be important too. The second thing, which is really important, is he talked about Amex and the 10 to 20 year outlook that he's had. Ultimately, I'm a long-term investor, and we are thinking about the long term. I always talk to you in previous videos about your horizon. When you enter any stock, what is your horizon? Are you looking at 3 years, 5 years, 10 years, 20 years, 25 years? Are you looking to retire off this? Like, if you have a long-term view and a long-term horizon, then any intraday movement or any intra-week movement is going to really pale in comparison to the whole bigger picture. We talked in one of the previous videos that if you take any 10-year period in the whole lifetime of the stock market over the last 100 years, it always went up. Any 10-year period. So if you took March 1971 to March 1981, if you took January 1954 to January 1964, any 10-year period, any 10-year increment, the stock market went up. So if you are thinking long term, then these intraday, intra-week dips aren't really going to have that much of an impact for you. And actually, what he did mention, which is the last key point, is you shouldn't really be buying on headlines. Naturally, there are always going to be headlines, and those headlines will definitely shake the market. But the way I've taken from that is that you should find out whether those possess an opportunity. And if there are headlines such as trade war, such as recession, such as coronavirus, that's making those long-term businesses that you believe in fall in price, then actually it is an opportunity. If you are down £1,000, down £2,000, down 30%, it really doesn't matter unless you wanted the money this year or you wanted the money next month. But in the case of me, for example, I don't want this money. I do want the money, but I don't want the money now. I don't need the money now. I'm investing for the long term. I'm investing for the future. So if I needed the money tomorrow, then absolutely I'm going to be upset that I'm down by this amount. But where I don't need the money for the long term, then actually this does provide a buying opportunity for me. And my portfolio specifically, I am long term. I don't plan to sell unless it's to reinvest. And the dip has, provided buying opportunities. I put some money to free trade, for whatever reason it didn't actually land today, so I probably missed a little bit of the rally that's now happened, but whatever, there'll be new dips, there'll be new rallies. Right now on your screen you can see that these are the top 10 best performers for Monday the 2nd of March, and you can see some big businesses: Twitter, Apple, Gilead Sciences, Walmart have done particularly well today. So some people are thinking that this could be a bounce back. Me personally, I genuinely don't know. And I will say that I genuinely don't know. It might actually all go back down tomorrow when new coronavirus cases start to emerge, or people might have actually sold so much now that actually they see it as an opportunity and people are putting money back into the market. It's very unpredictable at the moment. It's quite unprecedented, so we will wait and see. But I know for myself, what I'm going to do is find the opportunities, the ones that had the biggest falls, and then obviously invest into them, and obviously take advantage of that. And so, yeah, I think, for you guys, just remember, you are buying businesses. Try to think long term. Try to not panic or react, but definitely respond to the situation in a more calculated manner. And I think overall, if you are thinking long term, then this is going to have a small impact on your portfolio, and actually it might have a positive impact if you actually take advantage of the situation. I hope you found that clip useful. If you did, like, comment, subscribe, and I will catch you next time with another investment.